Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.
Tonight, the FDA approves Merck's antiviral COVID pill. So, you don't like a shot? Pop a pill. Oh, and by the way, it's Christmas Eve. We'll have that and more tonight on Wall Street Wrap-Up. Hi, welcome to Wall Street Wrap-Up. I hope your week went well. I'm Andre Laborde. It's Christmas Eve on this Friday, December the 24th, 2021. And speaking of 2021, this year only has a few more days left, and 2022 is just around the corner. Now, normally, this coming Monday will start what's called the Santa Claus Rally for the stock market. Now, let's keep our fingers crossed. Well, this year, hopefully, will be a normal year. The Santa Claus Rally is the 5 days before the new year, plus the first 2 days after the new year. And we'll be talking with Jim Campbell. He is the author of Madoff Talks. Now, we interviewed Jim a couple of months ago, and we received so many positive responses, we wanted to bring him back. Jim wrote a great book about the scam of the century. Actually, the last 2 centuries, the 21st and the 20th, by Bernie Madoff. Jim was the only author and reporter to actually interview the whole Madoff family, including Bernie, about his Ponzi scheme and how he stole literally millions of dollars from unsuspecting investors. Netflix is now filming a documentary on his book, and he is the executive producer of this Netflix show. Jim is going to be with us in just a moment. Well, so how did the markets do this week? Well, the markets were closed today for Christmas Eve. So these are after the closings on yesterday. The Dow Jones Industrial Average ended up for the week at 1.6% for the week. And the S&P 500, they closed for the week up to over 2.25% at 2.27. And finally, the NASDAQ, they finished the week up 3% for the week. Now, we had Jim Campbell, as I mentioned a couple of months ago, about his book, Madoff Talks, and the swindler Bernie Madoff. And let's talk to him now. Hi, Jim. Welcome to Wall Street Wrap-Up.
It's my honor to be here, Andre, and thanks for having me.
What did you learn about Bernie Madoff that you didn't know before your research of the book?
You know, that's a good question. I'll say, first of all, I am stunned. People will be stunned at how little they know of the overall story. But to focus on Bernie first, I think the most unfathomable part of it was the way his brain was compartmentalized. One would think that since he ran a legitimate, honest, customer-focused market-making business, that means executing trades for instance, discount brokers like Schwab for their customers. He always put their interests first. It was worth $3 billion in and of itself without any Ponzi scheme. The fact that I uncovered, and when I say I uncovered from the research of the work that had been done, that he was actually running the criminal enterprise downstairs in the Lipstick Building in Midtown Manhattan at the same time. So one of the most ethical businesses on Wall Street, one of the most the biggest criminal enterprise on Wall Street. And as I called it in the book, the front of the restaurant was very legitimate, and downstairs, normally the back of the restaurant, but in this case downstairs in the restaurant, was a complete fake fraud. And they both ran over the same 40 years undetected.
Now, Jim, that's an excellent point, because in the Lipstick Building, where Bernie L. Madoff Securities had their offices, they rented the offices of the 17th floor, the 18th floor, and the 19th floor. So the 19th floor was a honest enterprise run by his sons, and the bottom floor, the 17th floor, was run by Bernie Madoff. Do I have that correct?
Yeah, well, Bernie ran the whole show, obviously, but he was the hands-on guy on the 17th floor. Nobody on the 19th floor was even allowed access behind the key card, even his sons. And his sons never understood what he was really doing down there. It frustrated them very much. And on the 17th floor, he hired inexperienced, naive high school graduates primarily. And the same guy led the culture that hired top-level business school graduates. So somehow he knew how to hire the right people at the front of the restaurant and at the back.
Control was an important part of Bernie's enterprises, both on the 19th floor, the honest portion, and the 17th floor, the Ponzi scheme. So when he hired these people on the 17th floor, he would make sure that they would have no business experience whatsoever?
Not only no business experience, no knowledge of how Wall Street worked. I mean, his right-hand person, admin down there, backdated trades for 40 years and thought that was kosher, essentially making up trades. And I'll tell you the comparison on integrity. That woman, Annette Bongiorno, in her final year was paid $670,000 and thought she had a $58 million IRA. The equivalent woman admin, right-hand person on the 19th floor, Eleanor Squilleri, was paid $125,000 and nothing in her IRA, no IRA. So, in fact, they both had similar jobs, but you could tell which one was honest and which one was not involved.
Eleanor Squilleri, she was on the 19th floor, and she was Bernie Madoff's personal secretary for 20 years or longer?
Oh, really? Really longer. I'd say maybe as long as 38 years, but close to that.
The 17th floor, which was the Ponzi scheme floor, now I just want, or the back of the restaurant for our viewers of what was going on. He hired those people that not only didn't have any financial experience, that they worked for him for a good 30 years, 20, 30 years, that were basically out of high school, who really thought that this was not something as a fully illegal enterprise. I mean, they may have thought something was maybe not as on the up and up, but they really weren't sure. Because from what I understand, that he even, and I think you used the part of silos, Frank DePascali, who was his right-hand man on the 17th floor, did he fully know what was going on?
He had the biggest, I would say, the widest viewpoint other than Bernie. And he knew that what Annette was doing was illegal, even if Annette didn't fully know that it was illegal. He knew. Frank is the only guy in the firm that knew everything but one thing. He didn't know that it was a Ponzi scheme. He knew they weren't trading. He was one of only two people in the firm, as far as I could determine, who knew that there was no real trading going on, not counting Bernie, obviously. And so he had a wide spectrum, but I'll tell you, he didn't think it was a Ponzi scheme right up until the very end.
And one of the biggest questions I've had friends and such when we would talk about Bernie Madoff from 2008 and even until when I would tell people that you're going to be coming on the show, they would ask me, oh, the kids had to know. Mark and Andrew, they had to know. Don't you think the wife knew, which was Ruth Madoff? With your investigations, do you think that Mark and Andrew, the sons, and Ruth, his wife, since they were teenagers, they knew each other and were married for many, many years, do you think that they knew what was going on?
Well, that is the $65 billion question, obviously, and I saw it to be the first media source. And I can tell you right now, the FBI thought they were complicit. The SDNY, the Southern District of New York, thought they were complicit. And I am pretty confident they did not know of the Ponzi scheme itself. His sons moved to turn him in instantly. They didn't try and hide any of their money or leave the country or do anything. Ruth's first question, she told me after she heard, is, what is a Ponzi scheme? The boys not only turned him in, Andrew never spoke a single word to his father again. And basically, it comes down to the fact that to know Bernie Madoff is to know that he would never have been able to admit to his family that he had turned to a criminal enterprise to keep the firm going. So no, I don't believe they knew. Now, should they have known? Yes. Should the SEC have known? Yes. Should the feeder funds have known? Yes. So Bernie had this way of somehow manipulating, bullying, and charisma, including his employees, on the 17th floor that no one would know. Andrew even tried to quit when his father wouldn't tell him exactly what was going on, and Bernie bullied him into staying. He was going to go to Goldman Sachs.
Another thing that what they would do is to try to get their father to let them in onto the IA,
Yes.
which is the investment advisory portion, which is the back end of the restaurant, the 17th floor,
Yes.
was that what happens, Dad, if something happened to you, we would not know what was going on. let us in on the both literally and figuratively. Let us in on the IA, the investment advisory portion, because we have no really knowledge. And Frank DePascali could be telling us untruths because you would not be there to contradict it, and he still would not allow it. He said, when the time comes, everything will be taken care of. So they.
Yep. He said, when I die, the business will be shut down. You won't have to know it. Basically, stick to your own knitting.
What are feeder funds?
Okay, these are hedge funds whose job is really to allocate customer assets among hedge funds, direct money managers that fit their investment profile. What these feeder funds did essentially was abrogate their one duty, which is due diligence. What is the strategy? Can it be verified? Can the performance be validated? Are the assets kept independently? And why did they abrogate their due diligence responsibilities? Because inexplicably, Bernie passed along all the money management fees, which are generally 2% of the assets under management and 20% of the profits. He passed all of that along to the feeder funds, and in return, they had to accept they could ask no questions, they could do no due diligence, and they didn't.
In fact, I was going to get into it a little bit later on, but when the investigations were taking place, and there was Harry Markopoulos and I think it was Nick Cello. One of the things that Nick Cello? Neil, I'm sorry, thank you. Neil Cello was saying is that to test it, what he said, told one of the feeder funds, he said, I'll tell you what, I will go with you, which means you will also get the commissions, but you have to have Goldman Sachs as a feeder fund, which meant that Goldman Sachs would have to do their due diligence and investigate all the trades, look at all the trades, and even then the feeder fund, and I want to say it was Fairfield Greenwich, but said no, we don't want that, which was a red flag, dead giveaway right there that something was wrong, right?
Huge red flag, because Goldman Sachs would have been the prime broker, which means they would have held the assets. Every trade that Bernie directed, they would have then executed, which obviously would have confirmed that the assets existed. Fairfield Greenwich knew they weren't allowed to do that, so they turned them down. Neil, in fact, got off of that call, sent an email to Harry Markopoulos and Frank Casey, the two others in their group, and said, this is going to be the biggest fraud possibly in history.
We're talking about a Ponzi scheme. A Ponzi scheme basically works that it has to keep moving. So in other words, it has to keep taking in money, because money that's coming in through the front door is going out through the back door, because there's always people wanting some of their money back.
That's exactly right. In fact, that's why Ponzi schemes are destined to fail, because you cannot keep people coming in the front door to the extent that they can fund the bigger and bigger group of folks that are going out the back door. Normally, they don't even last very long. This was unbelievable. It lasted for 40 years. And of course, the SEC in 5 separate investigations didn't find it.
They did 5 investigations. It's amazing after all those investigations, it was not turned up.
Not only was it not turned up, but they kept investigating Bernie for the one violation he never, ever committed, which was front running, which means jumping in front of your customers' trades because you know how it's going to move the market if it's a buy or sell. They thought that's how he was guaranteeing performance, because he was front running his own customers. He never did that. And they did not have the right people. You talk about silos, right? Mm-hmm. They needed to have investment advisory experts on the case, and they never had anyone but broker-dealers, examiners, so they kept looking at front-running. And frankly, the SEC could have solved this case in under 5 minutes with one phone call, and Bernie even gave him the evidence, which is his account 646 at the Depository Trust Clearing Corporation. Every trade settles through that. Every single market-making trade could be found going through there, 500,000 a year. So he said, call that number. You'll find I have a sub-account for the IA, or investment advisory business. They didn't make the phone call, and there was never an account called IA in 646. Bernie told me that he gave him on a Friday night. He expected to be in handcuffs by Sunday.
FINRA, which is the Financial Industry Regulatory Authority. FINRA was created from the NASD. the National Association of Security
Right.
Dealers, formed from to create rules that financial advisors should live by. Who was the chairman of the NASD?
And not only
I
was
like
Bernie,
leading questions, but yeah.
yeah, not only was Bernie at one time the head of NASDAQ, he was actually one of the founders of putting together an a national electronic brokerage by connecting the regional exchanges that operated independently, and then basically was able to break the New York Stock Exchange monopoly. So he had a tremendous impact on the industry. And yes, FINRA, he was part of the FINRA club. In fact, people laugh. FINRA used to send for new orientation their new hires to Bernie's office because it looked like the set of a Hollywood version of what a Wall Street firm should look like. So he was pretty much in bed with FINRA.
So for the first-year investigators, FINRA would send them to Bernie L. Madoff Securities to show on the 19th floor, to show them what it really should look like. So they walked in feeling intimidated already on how Bernie Madoff really has his act. In fact, I think you even have it in the book. You could even eat off the floors. That's how it was, wall-to-wall marble. And as like you said, like a Hollywood set, there were wall-to-wall monitors as for seeing what was going on the streets on both the NASDAQ and also in the New York Stock Exchange as well. I'll tell you what, we're talking, hold that thought, Jim, because we're going to take a break. We'll be right back. We're talking with Jim Campbell. He is the author of the new book called Madoff Talks. In fact, he is the only one also that was able to talk and interview Ruth Madoff and also with his sons as well. We'll be back right after this. And we're back. We're talking with Jim Campbell. He's the author of the new book out right now, Madoff Talks. When you want to get into a hedge fund or a private equity or some other type of alternate investment, normally a person has to sign a waiver or a statement that they're what's called a sophisticated investor. They have to have X amount of dollars in assets, excluding their home, et cetera, such as that. Did Bernie Madoff make his investors sign that as well?
Yes, he claimed he did, and that was one of his rationalizations for not feeling a whole lot of remorse. He said folks that got in without meeting those requirements lied on their forms, and therefore they did not fully understand the risks, and therefore it was their fault. So he always claimed he did. He claimed he threw people out when he found out they didn't. He found out that sometimes when people left, the feeder funds would take them right back in. So it's a mixed bag in the sense that there were a lot of people in there that were of average net worth that trusted Bernie over 30, 40 years. He was called the Jewish T-bill, as supposedly as safe as the U.S. T-bill.
What happened to these feeder funds? Were they were they brought to justice as well?
That's a great question, because one of the untold stories of this Ponzi scheme is there were two other things going on. One is that this was a tax fraud scheme, criminal tax fraud scheme, by his closest investors, one of whom made $7 billion out of the fund, 9 times what Bernie put into the market maker in the back door. And the other thing was international money laundering of bad characters coming in through international feeder funds. Not one of those feeder funds, not one of the criminal tax acts by the old line investors, not any of that was prosecuted criminally.
He never had losses. It was always a consistent type of increase, which meant that he would have to be paying on capital gains. So was Bernie paying on capital gains not just on the 17th floor as well as the 19th floor, which was both? Was he paying on these capital gains?
This is one of the sad parts of the story. Bernie had no gates on that hedge fund, the Ponzi scheme, which meant people could take money out anytime they wanted. Some took money out monthly. That trading in his strategy was very short-term oriented, and they paid in cash short-term capital gains. Now, the big four, the big guys I just told you about, they concocted and made Bernie execute fake losses for them to get out of paying taxes. But the average Madoff investors did pay short-term capital gains in particular.
When did he start this as it going bad? I mean, sometimes people start off as it, as a criminal enterprise. Some people may wanting to have started off as something good, but the losses started widening and widening. When you were talking to Bernie Madoff, when did Bernie tell you that things were going in a fraudulent manner?
1992. He never budged off of that, and it's a story that he told me that he hadn't told publicly about a big loss that his big investors forced on him, and he said he ate it, and he made the fateful decision to double down like a gambler would do and get it back, and then no one would ever notice it. Of course, that never happens with a gambler. Unfortunately, the story wasn't true. And the true story was that he actually did them simultaneously. And I think he had a psychological benefit from the legitimate side, which is he was making money whether the market went up or down on commissions. He controlled the costs. He put in leading technology. Then he had 24 initial customers, mainly family and friends, and he started doing money manage for them. And oh my God, I have losses. I cannot tolerate losses. He was mortified by losses. And guess what? He started making it up, no losses. His investors came to feel that they had no threat of losing money ever.
Now, also, one of the separations that Bernie kept talking about was that the front end of the restaurant, which was on the 19th floor, was the honest portion, the 17th floor, which was the Ponzi scheme, but that the two were separated. But actually, the front end of the restaurant, the 19th floor, the one that the sons were running, were actually losing money. And so they were being propped up by the back end of the restaurant, the Ponzi scheme, for many years prior to that. Is that true?
What's exactly true is from 2001 on, they would have been insolvent without the $800 million that he stuffed in the final years of the market making. But the market making trading itself was always profitable. The problem was he was carrying too much overhead, and obviously the Ponzi scheme was fake. Rather than fire people and cut back, he plugged up and propped it up. What the investigators thought, this is why they thought the boys were complicit, was that was propping up proprietary trading losses. I found the two people in the firm that saw the actual P&Ls before the money was put in. The trading was not unprofitable. The prop trading division's worst year was a loss of $10 million. The market making piece always made money. That minus $10 million was covered by the market-making profit, which meant there was no need for $800 million for trading losses. It was used to cover the overall firm becoming insolvent.
Jim, we just got about a minute left or so. What about lessons learned? You know, there's the old saying about insanity is doing the same thing over and over again, thinking you're going to get a different result. What did you learn that needs to be done? So, that, I mean, there'll always be Ponzi schemes, but something like this massive fraud would not happen again. What do you think?
All right. The first thing is I call individual investors need to adopt the Hippocratic Oath, which is the medical term for do no harm. Do not give your money into something you do not understand. I could never find anybody, victims or even the traders upstairs, who understood what Bernie was doing. Don't do something that's too complex. Don't do something that guarantees you a benchmark return up front, which he did, which is not possible in a market-making business. Index funds, low cost. The market's done 9% a year for 100 years. Bernie was offering 11% at the end. I say take the 9% and sleep at night. On the SEC, I say they need a cultural transformation to become more proactive. They're not a cop on the beat. They come in after the mess is made and clean it up at that point, which is a little late for victims. So there needs to be a cultural transformation on the SEC side. On the individual side, don't assume your government's going to be there. Don't assume the SEC is going to be there. SIPC didn't pay back investors as they should have, like the FDIC does with banks. So buyer beware and take responsibility for your own investments, and the government needs to make major reforms. I have 30 of them in my book.
One of the lessons learned from September the 11th, 2001, the FBI wouldn't talk to the CIA and vice versa because fiefdoms, they wanted their own areas, and they didn't want to communicate with each other. Well, FINRA wouldn't communicate with the SEC, the Securities and Exchange Commission, and vice versa. So one of the things also, I think, is better communications between government agencies. Correct?
Well, not only within government agencies, but the SEC had silos. They didn't talk to each other. They never got the right guys on the case. And by the way, their Washington analytical office figured out in under 2 hours Bernie's numbers couldn't work. Information never got to the examiners. There was one exam that the SEC had 2 teams in there, and only Bernie knew it. The SEC didn't even know they had 2 different teams in there. They were never looked at by Ponzi scheme investment advisory experts ever. The Boston branch didn't talk to the New York branch that didn't talk to the Washington branch.
Netflix wants to do a show on your book. Is that right?
They want to do a documentary on the book, and we have the leading true crime documentary person, Joe Berlinger, really wants to do it. So we're very excited, and that will get wide exposure. He told me 100 million folks would see it in the first 28 days, and I would love for the untold story to get out as much as possible, including, Andre, being on your show, which I really, really appreciate. You've been great. You read the book very closely. It's been an honor.
Thanks, Jim. We really appreciate you coming back. Well, if you've got a question about finance or a comment about the show, we'd love to hear from you. Make it pithy or concise and write us at andre@wallstreetwrapup.info. And now for a look ahead for next week. But first, what company announced that they will pay you $20 not to make cheesecake for Christmas? We'll have the answer in just a minute. Well, what company announced they're going to pay you $20 not to make cheesecake for Christmas? Kraft Heinz. The owner of Philadelphia Cream Cheese announced the marketing move amid a shortage of cream cheese. Well, we're going to be here next week, December 31st, the last day of the year. We've got a lot of good things in store for next week's show, so you don't want to miss it. And also coming up for our first show of 2022, just 2 weeks from now, we'll be talking with Mario Gabelli. Now, Mario is the founder, the chairman, and the CEO of Gabelli Asset Management. He's got over $40 billion of assets under management. And how does he see 2022 shaping up? And where is he putting his money to invest so we'll know where to put our money? Now, as a reminder, we repeat the show on Sunday mornings, but always the best way is to set your DVR so you'll never miss an episode. And that's our show for Friday, December the 24th, 2021. Hope you've enjoyed it. My thanks so much again for Jim Campbell for joining us this evening. But as always, we appreciate you for allowing us into your homes tonight. Remember, you can always follow us on all the social media on Facebook, YouTube, Twitter, and WYES.org. So have a Merry Christmas tomorrow and a productive week ahead. I'll see you next week. For Wall Street Wrap-Up, I'm Andre Laborde. And remember, money never sleeps. Good night.
Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.